I came. That's why I was like, "Yo, what do you want to talk about on the podcast?" Because I wasn't sure, but we had a really good podcast before where you talked about all your investment properties and like how you were crushing. So I think we could either do, for the listeners, like an evergreen podcast, but I think we actually talk about more high level things than that. So what I actually want to ask you is, and the podcast has started, we do a cold intro like Joe Rogan. Javier's sitting over there, Bronson, like, is he gonna like intro the pod? And it's like, we are in the pod right now, sir. So the first thing we're gonna do, let's I got Javier from Moving Mortgage back on here, but everyone doesn't know you, and they should. So intro yourself, my guy.
My name is Javier Gonzalez. I'm with Movement Mortgage. I'm a senior loan officer. I've been in the business for 8 years. I'm a family man. I got two beautiful daughters. I live in Haymarket, and I'm just happy to be here, man. I like helping people. That's kind of what I do. My goal is to help people build wealth through real estate, and I've done that over 800 times because I've helped over 800 people in my career. I'm humble, bro. You're gonna say it like they're gonna know, bro.
Well, let me know. I'll let the people know that you're crushing.
You can't say it. I keep my shit low key. You go on my page, it says nothing, right? Because I'm a big believer of winning in silence. That's like my thing the past few years. Like, I don't like to flaunt my wins, my numbers, nothing. Because at the end of the day, it doesn't make a difference. As long as I know that what I'm doing is working for me, nobody else gonna know.
Okay.
That's my mindset, right? I don't know if it's right or wrong, but that's just how I do it.
Well, just to put into context, because I'm going to celebrate you for a second. You did $35 million last year, and you're pretty much like a $30 million a year lender.
Yeah, I'll probably do 50 this year.
Okay, 50. Yeah. So put into context what the average lender is doing versus, a $30 million, $50 million producer. Like, what's like the average lender doing?
Like volume-wise?
Volume-wise.
10 million maybe.
Yeah. So you're 3 times, and maybe this times you're doing 5 times the volume, which you can celebrate that if you want to. I will, right? But also that means you have a ton more experience. You've been in the game. You've got way more at bats. So you've been in the mud with the loans and the programs and different types of buyers like over time, right?
Yeah. I mean, it's just honestly, every loan that you do is a repetition, right? It's like every loan is an opportunity for you to practice, for you to get better, for you to better yourself.
Yeah.
And just continue polishing your skills. It's about how many shots you take. Like over the years, I used to hate Kobe, like, because I'm a Celtics fan, right? So
I'm a Celtics fan also.
Yeah, I know. We talked about it before, right?
Yeah.
But I used to hate Kobe because Kobe will always smoke the Celtics, right?
Yeah.
And then Kobe retired. And then when I got into business, I got more into like the mindset of things, of like how to develop my mind, train my mind, to really put in the work, right? I kind of recognized that like that Mamba mentality, like his vision, like I live for that. Like for me, that's the most important thing, right? So having conversations, like talking to people, doing whatever I gotta do, more loans, it's just more repetition. It's just more time that I'm spending in the gym doing what I'm supposed to do. And I'm out to work everybody. I don't give a shit who it is, right? People are not gonna have my work ethic and the talent that I have. So when you combine both, you can do incredible things. I'm not the only one, though. I may make that clear, though, right? There's people more talented than me that do more business than me, and that's okay. But I know what I do, and I hone in on that, and I don't know, just I don't like talking about this, bro.
It's okay. I mean, we're introducing you. We also need to establish.
I just like to keep it
like Javier's
humble. But
I have one more question about that, right? So like you've been in the business 8 years, and you're doing a ton of loans, a year. And so what do you think the biggest difference for the consumer, right? For the consumer, what's the biggest difference from a lender who does a lot of business and a lender who's like year 2 or 3 versus a lender who's year 8? Like, what's the benefit to the consumer?
It's the process, the systems that we have. I have a whole team that takes care of everything for me, not just me, but also for the clients. It's just a smoothness, right? How smooth is the process going to be? A lender at the beginning, but you may not have a team because you're still building your business, which is hard because I did it, right? And I had to do it all by myself.
Yeah.
But then I said, when you're by yourself, you're taking the applications, you're collecting all the documents, you're having to review everything on your own. Kind of you're working solo, right? And it's very difficult to scale while you're doing that, but that's just the nature of the business, right? So for me now, I have a team, so it's a seamless experience for people. A borrower will come through, I'll talk to them, do the initial consultation, they complete the application, my team takes over, they get all the documents, we make sure we have every single possible document up front, we underwrite the file up front. Once all of that's taken care of, the borrower is welcome to start shopping.
Yeah.
And once they're shopping, they're in constant communication with me to make sure we run numbers, help them figure out what makes them comfortable.
Yeah.
And then we go under contract. But I think the biggest difference maker for me personally, and what's like just a game changer, is that I don't sell anything.
Yeah.
I just help people, and I give people the advice that I wish somebody was giving me. For me, every client that I do, I look at them as if I was them, as if they were my brother or my sister, and what will I do? Some people may not like that because they may think, oh, this guy thinks he knows like what he's doing more than me. But I'm like, I don't necessarily know more than you. I'm just saying this is what I would do if I was in your situation.
You know, I think that's interesting that you just said that you don't sell anything, because I was actually on the phone, I think with another lender that I was just catching up with. And I said to her, I said, you know, we're not really in sales, even though we're kind of technically in that. That's what they categorize us in.
Yeah.
I said, we're really in service and education. I don't sell anything. I can't walk into a house and say, hey, this is the best house on the block. You need to buy it, blah, blah, blah. Obviously, you tell people, hey, here's your wish list, and here's what you told me your pros or cons are. You put that stuff into perspective. But I can't be like, this stone on the fireplace is from Spain, circa 1317. So like it's amazing, right?
Yeah.
You're just educating them on, hey, this is what's happening in this neighborhood. This is why I think there's going to be equity. This is why I think this is going to be good investment. This is why buying a house is better than renting. And so we're actually in the education business. And I think that's how how I've gotten a lot of business over the last 9 years. And then we're in the service business because we have to do a great job for our clients, because a lot of our business is through referral, right? Or through Sphere, at least for me.
Yep.
And so it's interesting that you also look at it like that, because it's like, how are you selling a loan product, right? Like, this doesn't really exist. And I think that's like that might be a problem for our industries, is that people don't realize that when they come to a realtor, they come
People
to a
sell
lender,
too much.
that is what they actually get. And honestly, the agents that are, pushy salespeople and like, I must convert, they don't end up doing that well for a long time, so.
Yeah, it's not about conversion, man, honestly, because see, there's the thing. As long as you do right by people, the numbers take care of themselves.
Yeah.
I'm not doing 35 million. I'm not doing whatever number I do this year, say 50 million, right?
Yeah.
Because I'm tracking, I'm going to do this or I'm going to do that.
How many calls did I make that led to?
I just do the activities. I just focus on helping people, taking care of people, and I do the right thing every single time. And as long as that's what I do, things take care of themselves. And to be honest, like, I'll probably close 50 million this year. If I do not, I don't really care.
Yeah.
Because I'm not even counting my numbers. I don't count what I'm closing each month. I don't count how many units are doing. Because see, I have this mentality, right? Where like, as long as I just help people and do what I'm supposed to do,
Yeah.
I'm taken care of. And that's it. That's the way I look at it, right?
Yeah.
I'm not tit for tat, nothing. It doesn't make a difference. Like, once you get into that mindset, it fucking changes everything. Because every conversation is not thinking with money on my mind. Every conversation that I have, it's just very honest, transparent, and natural with people about how can I help them be in a better situation.
I just want to let the listeners know and Javier know that he's reached his curse word limit on the
I
podcast
apologize.
today.
Well, last time we cursed, bro, so I didn't know.
Didn't we curse in the last podcast?
All right.
You probably cursed in the last.
No more
if my
cursing.
grandma listens to this, she can't hear me cursing, bro. You know what I mean?
Mama Bush, I apologize. I'm so sorry. No more cursing on my
So let's get in the mud a little bit. What everyone wants to know, what everyone would ask any lender.
Okay.
What is Jerome Powell doing? What's the situation with the interest rates?
They are supposed to be trying to cool down inflation, right? The truth is, honestly, though, I don't really know what they're going to end up doing, and I don't get caught up in that. Because, see, people like to get caught up in all of those numbers, but do people really know? Nobody has any idea. So, personally, I don't even look at rates anymore. I used to look at rates all the time. But guess what? It doesn't matter if the rate is 0%, 10%, 5%. Is it really going to make a difference?
What do you mean? Explain that. Why does it not make a difference?
Because people that need to buy a house, that don't own the property, still need to try to find a way to get into a property because that's what's going to help them over time, right?
Okay.
And people that need to sell their house today because they need a bigger house, they're going to have to do it anyway, right? So at the end of the day, you cannot buy a house based on the interest rates. A lot of people may say, oh, I'm waiting. But guess what? How long have people been waiting to buy houses? Because the rates continue to go up. You cannot control it. So what you do is you simply say, I'm ready to buy a house. Cool. So what's my situation? How can I qualify based on where things are at today? And if you talk to somebody like myself, a lender, they help you figure out your numbers. And if the numbers make sense, and this is the key. This is why I said the rates don't matter, because it's not about the rates, it's about your payment.
Exactly.
If you can afford it, you buy it. That's it. It doesn't matter, like, thinking the rates, because what? Somebody says, well, the rates were 3%, now they're 7%, so I'm going to wait until they're 5% for me to buy. What if that's 3 years? The house that you could buy today at $500,000, and now it's going to be, say, $575,000, right? Say that the rate, that's dropped to 5%. You're going to pay the same amount of money because you're buying the house at a higher price point. And guess what? You paid rent to a landlord
Exactly.
for the 3 years.
And that's what people don't realize. If you're renting at $2,000 a month, which is like almost impossible to find in this area, right? But if you're renting at $2,000 a month and you do that for 3 years, you've paid almost $75,000 in rent. And you could have just caught. Yeah. Is it 36?
Well, 2,000, yeah.
Isn't 12 times 2 24?
Yeah. No, hold on.
If you're paying 12 times 2 is 24.
You said $2,000, yeah.
So that's 24,000 times 3. You're almost at 75,000. Come on, bro. My math game is like pretty strong with the simple numbers. So in that example, only with the simple numbers. Even in that example that you used, I mean, 500, the house goes from 575. You basically paid that to rent instead of getting the equity from the market and then the mortgage pay down.
And so you also get benefits from tax deductions anyway on top of that, right?
So there's a lot of money. So I also tell people the same thing. I'm like, you're not interest rate shopping. You're mortgage payment shopping. You know, that's like really what you're trying to do. Like, can you afford this on a month to month? That's like the number that matters, you know? And renting is not the wave. I have a client that they bought last year at 7%, but they could have bought, the first time they even thought about the market was 2018, and they just procrastinated. And at that time, rates were, you know, in the threes somewhere.
Yeah, like 3-4% 2018.
And the houses that they were looking at were like $250,000. And the house they ended up buying was still, you know, in the mid threes, but it was a condo instead of a townhouse.
Yeah.
And it was in Manassas instead of Woodbridge. And because the houses in Woodbridge were now worth $450,000, you know, so they really missed out on the market a lot.
Well, a lot of people just miss out by not doing it. I mean, it's the same thing as the stock market, right?
Yeah.
See, I think this is also a big problem, misconception in real estate. People look at real estate as like, oh, that's housing, you know, that's a bad investment, right? Real estate is the best investment. It's just like the stock market, right? If you ask somebody, when's the best time for you to start investing in the stock market, right? Everybody's going to say the sooner they start investing, the better, because then over time, it's going to go like this.
Compounding interest.
Real estate is the same thing. It's no different, right? And I have a bunch of videos on my IG about this, right?
So what do you tell people when people are like, well, what if the market crashes? What do you say to that?
Just like you need to look at real estate as an investment. If the market's up or down, do you stop investing in your 401k?
Yeah.
Most people say no, right?
Yeah.
Most people keep doing it, right? I'm like, if the market crashes, well, do you know when the market's going to crash? No. Okay. So then if you don't know when the market's going to crash and you see where the prices are going, if it continues to go up and say that there is a crash, it may come down, but it's not going to come down as much as you're thinking it's going to come down. So then what's the point of you keep waiting? And then you look at the cost of waiting also. Then you factor both, right? If the market crashes in 5 years, what's the cost of you not taking action for the next 5 years?
Yeah, I tell people, I say it is going to crash. They're like, what if the market's going to crash? I said, it is going to crash. It always crashes.
Yeah, you just don't know when.
And I said, but if it crashes, can you rent your house out for more than your mortgage is? Or if your mortgage is $3,000 and you rent it out for $2,500, can you eat that $500 until it comes back? And then I'm like,
but
if it does crash,
you could stay at the house, and if you bought a home that you can afford, it doesn't matter.
Yeah.
That's why buying something that you afford is key.
Yeah, or if it's like, if it does crash and you don't have to leave, you can just wait out the market because we do know it's going to come back.
It doesn't matter because
so
you
it's not
afford
a
the house.
big deal, you know?
And then also another thing too, when you talked about how people say, oh, can you eat that $500, right? There's something people don't realize. So I talked to somebody yesterday about this too. They're like, I want to move out to a new house, but if I move out right now, my rent, you know, I'm down like $300, right? So that's what, 300, that's $3,600 a year total, right? That they're going to be in the red.
Yeah.
But I said, so cool, but if you keep this house and it appreciates at, say, 4%,
you're way up.
You're going to be way up anyway, right? So say that it's, I don't know, just say, you know, say that the appreciation is 20 grand, right? What's the math on that? 16,400. Right? So you're way up. On top of that, you also get tax benefits too. On top of everything else.
Yeah.
And a lot of people investing in stocks, right? So I'm like, you still put in $300 a month your Fidelity account to buy Tesla every month and dollar cost average, right?
Yeah.
You can put that in your real estate, in your house. It's your real estate fund. It's the same thing. That's the way I look at it too. It's like, because now the market's really challenging, because back in the day, you used to be able to get a house, put in 3% down, say a $400,000 home, the mortgage would be like $2,200, right? Guess what? You could rent that same house for the $2,200.
Yeah.
So that was the hack.
But the numbers
right?
aren't the same anymore.
The numbers are not the same. That $400,000 house now has a payment in the 3,000s. So it makes it a lot more challenging for people to do that, because the rents haven't gone up that much, right? But if you understand this and you can afford it,
Yeah.
then it's still worth to do it. That's why it's key. You know, you ask me, what's the difference with like you and people, right? I explain people like that. I explain people the difference. I get to the nitty gritty of things so that they can truly understand.
Yeah.
And I leave the decision up to them. I'm not trying to convince them to do something, because I don't need. You know what the beautiful thing about like just helping a lot of people, when you get to a point where you don't need to help anybody, because then you don't have the pressure of, I need to convince this person to do something because I need that deal.
Yeah.
Right? Once that thought escapes your mind and you don't need anything from anybody,
You just, your whole skill set goes
your
up.
whole skill set goes up, because you take psychologically, everybody is always thinking about what's going to be in it for me.
Yeah.
And once those thoughts go out of your mind, everything changes.
So what's your, right now, what's your clientele base? Like, are you working with more first-time home buyers, move-up buyers, downside? Like, what are you
I think it's a
dealing
mix, move up, first-time buyers.
First-time home
That's
buyers?
really the like main, yeah.
So right now, what does a first-time home buyer need to know about, you know, mortgages? And
I would say you need to say that you want to buy a house in 6 months. I would say you need to talk to a loan officer, talk to a realtor, put a plan together so that you know exactly where you stand. We got to look at your credit, make sure that your credit's solid. We got to look at your income, see exactly how much income you have and what your affordability is based on the income that you have, what debt you have. And then for a lot of people, maybe it's smooth, right? It may be like, oh, you're super clean. You're going to be ready to go. Just kind of wait it out until the time comes for you. Some people may need a little bit of work. I feel like it's a mixed bag.
yeah.
Because you got a lot of people that want to buy, but they have some challenging financial situations. But they still want to buy, and they could still be buyers, and they may need some help, right? So I run into both scenarios. I have some people that come, they're squeaky clean, and some people that need help, but we help everybody, so it doesn't make a difference to me.
I tell people, now when people are like, hey, I want to buy a house, how much money do I need to have saved? I'm like 6%, right?
Factoring closing costs.
Because, down payment, 3%, and then, 3% for closing costs. But I also tell people kind of my first-time home buyers now are actually putting down between 3 and 10%. Are you seeing that number? Like, how much cash does the average first-time home buyer need today in 2025?
Yeah, I think it depends. People buying at the lower price points tend to, barely make it. Basically, they're putting like 3%, and we're trying to look for subsidy. Maybe they do use some grants to try to bridge the gap. Maybe out of pocket 3 to 5%.
Okay.
People buying at the higher price points, say 600-700, they're normally putting down like 5%.
Okay.
Because see, there's the thing. To be able to get a $700,000 home, let's say today, right? You probably need an income of at least $150,000 minimum, right? And have very little debt.
Yeah.
People that have that kind of income are also able to save more money.
Yeah.
So because they're able to save more money, they're in a position where they can actually do something. Where somebody that maybe makes $75,000 is buying a $300,000 home, they may not have the ability to save as much.
Yeah, they just don't have as much margin.
Correct.
Can you explain what debt to Can you explain what debt to income ratio is?
Yeah, so debt to income ratio is the percentage that we take from what your overall debts are going to be, and that includes your car loans, credit cards, student loans, a mortgage note, so the mortgage payment, against your income.
Yeah.
So say that your mortgage is $3,000, and between car loans, student loans, and credit cards, and it's minimum payment for credit cards, not the balance, right? That's $5,000 total, and you make $10,000 a month before taxes. Your debt to income is 50%.
Okay.
Right? On a conventional loan, that's the max that you can have, that your debt to income is allowed to be for you to buy a house.
Okay.
On an FHA loan, which is a government loan, you can go up to 57%. So a lot of people
That's pretty high.
Yeah, it's pretty high. A lot of people go FHA if they have a lot of debt or maybe a lower credit, because FHA gives you a little bit more flexibility to push your limits to be able to qualify.
So you can afford more house
Right.
if you go FHA that way. But then you have higher mortgage insurance with FHA, right?
Sometimes depends on the credit.
Okay.
Because if the credit's really good on conventional, then absolutely, because the mortgage insurance actually gotten really cheap if you have good credit.
Because is it true that if you have like a 705 credit score, 695, so you can go conventional, sometimes the deal, like the overall numbers with FHA are
They're
better?
better, correct.
Yeah.
Because, so say that you're going conventional and you have 700 credit score, but your loan to value and your debt to income, you're like pushing it to the limit, right? With conventional, that higher the loan to value and the debt to income, the more expensive the mortgage insurance is.
Yeah.
With FHA, it's pretty much the same.
And I
So
know
that's
that
the difference, right? Because then you pay more mortgage insurance on the conventional, where you may be better off going FHA, and the rates on FHA are also lower.
Oh, okay. I know that with FHA, the mortgage insurance used to drop off, and then it didn't drop off anymore.
It doesn't.
But now it's through the life of the loan,
Yeah,
right?
correct. Conventional, you can drop off, but not in FHA, so you got to refinance out of it.
Oh, so the plan is to refinance.
Correct.
Yeah. I'm tough because we bought in DC FHA, and but our rate's 3.6.
Yeah, so you got to keep
And
the
so
house. No,
I
you just
gotta keep it forever.
Yeah, it doesn't make a difference. It's the same as if your rate was basically 4.5, right?
Yeah.
Yeah.
So we keep it, but we have it rented out right now.
Yeah.
And then we have the cash
Yeah,
flow.
so you're doing good.
Yeah, so we're doing
Yeah,
good.
you're still cash flowing on the house.
You might need to be in the city now. We'll rent you our house if you need to be in the city.
Yeah, this is the deal, though. You want to talk? Yeah, don't bring up the city, bro, because you don't want to go there with me.
So I love the city still, and I would still love to live out here. You know why? You know what happened? We were in DC.
No,
and
hold on,
so,
give these people
so let's give
context.
the
These
backstory,
people
right?
don't know.
So Javier and another realtor and friend, Pedro, these guys are suburbanites through and through. They grew up in Chantilly or Centerville, out 66. They're scared of the city. They've never even touched this place,
Scared of
right?
the city.
Me, I'm from Annandale. Shout out to Annandale, but I love DC. I love if I moved to Chicago, like Illinois, I'd live in Chicago. If I moved to Pennsylvania, I'd want to live in Philly, right? I just want to be in the city.
Hold on. So where do you live now?
Right now, I live in Fredericksburg. We were going to sell our house in the city to cash out, basically, and then buy our next house. So we had it for sale, and then we decided to rent it. Through that process, we were out in Fredericksburg, and I got really comfortable out there. We figured out school, sports.
So you're a suburbanite now.
Just like the vibes, right? But this is the deciding factor. So we were actually, my wife's a doctor. She crushes. She's a PhD. She crushes, but she's killing it, right, in her field. And I'm doing well too. And so, we were like, the original plan was, we'll buy something we've always talked about, we've been together 10 years, that we're gonna buy something that's like 1.2, 1.3, and that'll be like the final house. And we were looking at McLean, the Palisades in DC. Fairfax Station was also an option, but the Palisades was like the main target. The thing is, when we were doing that, rates were 3%. So 1.2, the mortgage was like $5,000, right?
Yeah.
Now it's $8,000, $9,000. And so the conversation became, yo, even if we feel like we can afford that, does it make sense to pay that for a mortgage? Like, does that make sense? I don't think it makes sense. I don't think it makes sense to pay $8,000 to live in this house. That's almost like $100,000 a year, and then that has to be net. Like, that's a net payment, right? And so we started looking at the market in Fredericksburg. So I'm like, hey, let's look at some houses around here and see what's going on, bro. For like $550, I could get 4 or 5 bedrooms, 3.5 baths, 3 levels, quarter acre, 4,000 square feet. So it's like, and what's the mortgage on that 550? If we put 10% down,
like
I'm looking at like 35,
under $5,000.
under $5,000. And so the math just didn't math anymore. Down near the city. So we decided to park out in Fredericksburg, and it is a very comfortable life, bro.
So you're basically just backing up your word, like you're just basically backing up the truck from everything, all the messages, all the things you said about living in Haymarket, living out there. You're just moving way farther out. So you're basically a sellout.
I think that
that's what you're telling me, right?
I think that unintelligent people get new information and they keep their arbitrary stance. And intelligent people get new information and they take action on that new information.
So let me
and so
ask-
I got
let
new
me ask you a
information, so I'm
question,
taking
though.
action on that.
You had this information. Because me and Pedro have been giving you this information.
Well,
You just didn't want
no.
to get information from us.
Rates weren't 7% at that time when we first had that conversation. So the finances would be different. And there was no, that's the main driver. The main factor is the rates went up. So the mortgage payment changed. And so, and then we decided to sell that house to buy another house. So God put us in Fredericksburg. And, it just happened. Like life just life that way.
Yeah,
And,
listen, I just like to give you a hard time.
and even though I had the information, I didn't have the real life experience of
Oh, so there you
living
go.
out
You
in the
had the
burbs.
information. You just didn't have the real life experience.
But also I had a better rate, So it's the rates changed.
that makes a difference.
Yeah.
All I am saying is that to me, because I can pull receipts
You can.
of all the stuff you said about living in Haymarket or whatever in Prince William County, and you moved out to an even more rural area.
It's not that rule out in fact. That's what people got to realize. It's built up.
You say whatever you want, bro. Right? I can pull receipts right here.
Yeah.
If anybody reads this, they'll say Nick Bush is a sellout. That's all I'm gonna say. But you got more. Hey, what did I tell you yesterday? I said I'm gonna bring the heat.
He brought the heat. All right, so before we get out of here.
No, but we ain't gonna. So Fredericksburg is a nice area. I'm just talking to smack.
No, yeah, we have. This is going to last forever,
Yeah, this argument is never gonna die.
Never. All right, so before we get out of here, what do people need to know about the real estate market today?
Sure. What do people need to know about the real estate market today? I think that there's opportunity in anything, no matter the situation at the time. There's always going to be opportunity as long as you know where to look, you know who to talk to, and you get the right information. It was very easy to get real estate a few years ago. Now it's tougher, but does not mean that deals are not there to be had.
Deals.
Right?
Yeah.
And there's also different ways to attack this. Like, for example, I buy investment properties, right? I got rentals. Right now, it's harder for the rentals numbers to work. So now I'm doing flips. There's always opportunity. As long as you're willing to put in the work, do the research, and go and get it. The problem is this: nobody wants to do that. People want what's easy. People want to put their hand out and wait for something to come to them. That's the difference.
So do the work.
Do the work. I posted that on my story today, so do the work.
Do the work. All right, so how do people find you, contact you? How can they get this $50 million service that you're offering people in this?
So on IG, my IG is Javier_Gonzalez the third. That's really like the main platform I use. One thing we didn't talk about that I want to bring up because it's key. I'm going to send you this book, by the way. And anybody that listens to this, this year especially, I'm so honed into this book. It's called The Go-Giver. Have you read it?
No, I've heard of it a bunch of times though.
I think I gave him a copy.
Yeah.
No, he didn't. Okay, I gotta give you a copy. So this book basically changed my mindset. I read it 3 years ago. And I've always been a giver when it comes to helping people, right? I'm passionate about helping people. But every single person, myself included, when you're helping somebody, say you do me a favor, right? You do me a favor because you're my brother. However, you're always going to be like, yo, I did this guy a favor, right? It's just subconsciously, it's just in your mind, right? So next time you do me I ask you for another favor, you'll be like, man, I keep doing these guy favors. It's just human nature. You can't, if somebody tells you that that's not true, they're lying, right? Mm-hmm. But I read this book. Anybody that reads this book, this does to you. This book basically just teaches you that you just got to give without expecting anything in return. So that little bird in the back of your head that makes you think, oh, I did Nick a favor, and I've been doing Nick 3 favors, and he owes me favors now, that thought disappears.
Yeah.
And as soon as that disappears, your world changes because you start serving people and doing things for people at a different level. And you're not thinking, oh, this is 50-50. But you also got to realize that something will come back to you. You just don't know from when or for where, right?
I know BNI, all the BNI groups love this book.
Oh, they like it?
And but I've learned 20 years ago that I don't like people that count favors. That's not a thing. That's part of my moral and principle. It's not my code, And so
Yeah, but everybody does it subconsciously. It's not even like people are thinking that, right?
I know that book is good for people that have like shitty value systems and count favors. You know what I mean?
Nah, you gotta
but it's
read
a good book overall.
Yo,
you
you're
know?
gonna I'm gonna get you a copy, and then you're gonna read it, and we're gonna come back on here, and you're gonna tell people you think. So I have a rule now, right? Business partners.
Yeah.
When I meet up with them now, I give them the book. My team, I just hired a guy. I give him the book. I said, you're gonna work for me, but the deal is this: if you're gonna work for me, you need to read the book.
Okay. Cool.
That's like my new thing. So,
Javier, thanks for joining me, my guy.
My bro.
We're on the clock. I'm looking at the clock over
we're at the
here.
clock?
You know.
All right.
So we out.